Hi, welcome everybody to Tuesdays with Terry. Thanks for tuning in. For the next 4 weeks in particular, we'll be discussing preparing for home ownership. After those 4 weeks, then we'll get into some other topics on real estate. I just want to take care of a little housekeeping before we start. First of all, don't pay any attention to me if I'm looking or doing things. I have papers and stuff here. Also, we're going to keep it short. 30 minutes. I promised everybody 30 minutes. So I won't be answering any questions live. However, if you have any questions, I encourage you to type them in and I'll get back to you personally with the answer to your questions or the best that I can do. So we'll just wait a few more minutes to see if we have any other people logging in, and we will get started. Well, we have about 2 more minutes and we'll get started. Once again, thanks everybody for tuning in. We're going to get started here in just a couple minutes. Just want to remind everyone that I encourage you to send us questions. I won't be able to answer those questions tonight, but I will answer the questions. I'll get back to you. Just either type it in or send me a message, and we'll get the answer back to you as soon as we can. And thank you for tuning in to Tuesdays with Terry, where we will be talking real estate every Tuesday night for a half hour. For the first 4 weeks, we're going to discuss preparing to buy a house. After the first 4 weeks, we'll get into some other relevant topics as far as searching for a house, what the closing process is like. Those are further on down the line. The very first step in purchasing a house is, first of all, deciding that you want to be a homeowner, and secondly, getting approved for a loan. That is the biggest challenge for a lot of people, and it's not really as scary as it seems. Let me just take a look at the clock here. It's 7 o'clock. So I think we'll get started, and as people tune in, we'll try and catch up. So thank you for tuning in to Tuesdays with Terry. We won't be able to answer any questions tonight. We're going to try and keep it short, 30 minutes. However, we will answer your questions, and this presentation will stay on the website forever. So if you missed it tonight, no fear, you can always come back and watch it at another time. So let me just start out by saying, repeating this quote here: the longer you wait to do something, the greater the odds are you actually won't do it. That's very true. It's true with me in my personal life. And I know I've been doing these home buyer workshops, seminars, classes for 10 years. And I get a lot of people that come and they're very interested in the beginning, and then they just kind of drift off. Uh, I've tried accountability, trying to stay in touch with everybody every week, but I don't think people really want that. This is something that you really need to do on your own. And tonight we're gonna try and explore some of the first steps and maybe take some of the fear or some of the myths out of it. So there are 8 steps to home ownership: deciding to buy, hiring your agent, securing financing, finding your home, making an offer, performing due diligence, closing, and then protecting your investment. Tonight, we are just going to talk about step 1, which is deciding to buy. Before you can decide, or before you decide to buy a house, you really have to know how much you can afford to pay, which is another reason why it's important to talk to a mortgage professional. We don't have time tonight to go into all the ins and outs of credit or qualifying for a loan, but the first thing you need to do is figure out how much you can afford. Here's a simple little spreadsheet here, not really a spreadsheet, it's just a little table from deadhelper.com, one of the credit agencies that I recommend and we work with. So first of all, you want to hook up with a loan professional, and there are a few that I recommend. I don't necessarily recommend banks. Banks have stringent credit score requirements, and I'm not always convinced that they want to loan money. Mortgage companies and mortgage brokers, they have much more avenues to pursue for an individual. So first of all, how much can you afford? I recommend, especially at this time that we're dealing with the pandemic, that everybody do a personal profit and loss statement. Now, it doesn't have to be complicated. It can be as simple as taking a sheet of paper and just writing all your expenses down. Get your expenses from going to your bank statement, and every single thing that you pay for, write it down. Categorize them, A, B, and C. A being things that you can't do without, rent, for one, you can't do without rent. B are things that you need to have, and it would be maybe a hardship if you didn't have it. C would be things that you can definitely do without. We find a lot of C's when we look at some of the apps that we pay for on our phone that we're paying for maybe every month, 99 cents here, 99 cents there, $3.99. You'll find that when you go down that sheet and compare it to your income, that there are things that you can save money on. For instance, your cell phone bill. Might be as simple as calling the cell phone company up and saying, hey, are there any new plans that I qualify for? Now, during this pandemic, one of the advantages of owning a house and having a mortgage is many mortgage companies are forbearing your mortgage and putting it to the end of your mortgage. Not many landlords are doing that because they still have to pay the mortgage company for the house. So that's the very first thing that I suggest you do once you decide you want to become a homeowner. Now, the second thing is know your mortgage options. The 3 biggest things are your down payment, your interest rate, and the term. Now, interest rates are as low as they've ever been and may ever be. A lot of banks are getting money from the Fed for 0 interest. So your interest rates are in the high 3s. You don't want to miss out on this opportunity. Now, when we talk about your mortgage options, there's lots of mortgages out there. There's the FHA. FHA is 3% down, and it's government backed. It's probably the best mortgage. The only mortgage that's better than FHA is VA. And that's if you're in the service and you build up enough credits to get a VA loan. VA loan's no money down. You can't beat that. If you're going to go shopping for loans, then the interest rate and the term come into play. So let's move on. Basically, why should you decide to buy? Well, you'll see that I'm getting some of these slides come from this book, this Keller Williams book, Your First Home. If anybody is interested in this book, please like the Facebook page that you're on and message me with your contact information, and we'll get a book to you. I have 20. So the first 20 people that do that will get you a book. So why pay rent when you can own? Well, as you can see, this slide here is a little bit dated, but let's just say that you're paying rent of $900 a month. Well, for $900 a month, you can get in a house. You might not get in a grandiose house in a gated community, but you can probably get in a townhouse, or you can get in a condo. And keep in mind that the first house you buy isn't necessarily your dream house. It's not like it was when, maybe I'm dating myself, when my parents were young. If you were able to buy a house, that was the house. And you stayed in that house till you paid it off, and you probably stayed in that house until you passed away, and then passed it on to your kids. So pretty much discussed this, paying $800 a month. You can probably afford to buy a house. To recap a little bit, do your profit and loss statement. Go through your bank statements. List all your expenses. Figure out how much you think you can afford to buy. Talk to a lender. Ask me for some lender recommendations. I have a couple lender recommendations. They'll pull your credit. Once you get your credit pulled, then you might have some things to work on. Now, almost every lender that I know has told me that they can get somebody qualified for a mortgage in 90 days. Now, that's somebody that is willing and motivated to do the things that you have to do to clear up your credit report. It might be things like, let's talk about support. That comes up a lot. You can deal with that. That might take 90 days. That might take more than 90 days because of the bureaucracy that you have to deal with in trying to work through that. And that can be best discussed on a one-on-one basis with myself or a lender. Student loans. Well, there are repayment plans now. And there are two companies that I work with, Debt Helper and Credit Brain, who both have student loan repayment plans. Now, there's an upfront fee to pay for that, but you owe $30,000 in student loans. Your payments are $1,000 a month. What if you could get a repayment plan that was as low as $50 a month? Now, it might cost you $300 or $400 or $500 to get into that plan, but isn't that better than $1,000 a month? And if you, for forbearance on these loans, they just tack on fees at the end. You know, after 10 years of forbearance, you could end up owing $60,000 for to repay. So it's much better to use one of these professional companies. I recommend Credit Brain. I recommend debthelper.com. You pay them a fee up front. You pay them a monthly fee to submit the paperwork. You don't have to worry about it again. I know people that have had $60,000 worth of debt that got a repayment plan of $0 per month. And after 10 years, most of that principal goes away. So I don't have the money for a down payment. I hear that. A lot. There are ways that you can get money for a down payment. Some of the most common ways are a gift, your retirement, 401k plan, savings, borrow it from a family member, but it can't be cash that just appears out of nowhere. In other words, it has to be seasoned. Seasoned means it has to be in the bank for a while. They have to be able to trace where the funds came from, okay? So those are easy sources for down payment. Now, there are a lot of programs out there for down payment assistance. Florida Housing has some programs for down payment assistance. The Mortgage Credit Certificate Program doesn't really give you money up front. It gives you a tax credit at the end of the year. Now, each mortgage company and each bank also has a down payment assistance program. The city that you live in probably has a down payment assistance program. The county that you live in probably has a down payment assistance program. You can't really generalize about these programs because everyone is different. And everyone has its pros. Every down payment assistance program has its pros and cons. Almost every down payment assistance program will have an income qualification criteria, which means if you make too much money, you don't qualify for the down payment assistance. But especially if you're living in Palm Beach County, that income requirement is pretty high. And a lot of people will qualify for it. I once had a client that qualified for $60,000 in assistance, plus down payment assistance. So she was able to purchase a house for almost, the mortgage was almost half the price. Now, in order to get that down payment assistance, she had to qualify for a loan. That's the first step. We always get back to the very first step is being able to speak to a lender, having your credit report pulled, speaking to that lender about what obstacles you may be facing in obtaining a loan, and then dealing with those obstacles. And many of them can be dealt with quickly. If you have outstanding debts, it's quite possible that you won't have to pay all those debts off. It's quite possible that, let's say you owe Macy's. It just first name that came to mind: Macy's, Sears, Penny's. You owe them $5,000 on a revolving account, and you haven't been paying on it for a year. It's quite possible that you could make arrangements to settle that debt for 10 cents on the dollar and not have it negatively affect your credit report. So there are a lot of tricks that you can use that really only the professionals know. You don't want to go out, You don't start trying to improve your credit on your own because you could do some damage. For instance, don't go out and open new credit cards until you talk to your lender. However, you can increase the credit that you do have, the credit lines that you do have. If you have a credit, so you have a credit card, you have a $10,000 credit limit, see if they'll increase it to $15,000. That works in your favor because you're using less of the credit you have available. Let's say you have a $10,000 credit limit and you owe them $9,500. You've used 10% of that credit. That counts against you. Spread out your balances. Open revolving accounts and transfer your balances. Don't close old accounts, but be sure to keep them active and reported. So, go out and buy something with that card that you have. The bills that you have now from this point on, you need to pay on time. You don't want your debt utilization to exceed 40%. Going back to the credit card example I used, if you have $10,000 credit and you're using $9,600, you've exceeded 40% of your debt utilization. So you want to have them up the limit. And don't open new accounts unless your lender sends you to specific places to open up an account to build your credit up. Keep your credit to mortgages, loans, and a few major credit cards. And don't just go out and, when you're shopping and you're at the department store and they say, hey, if you do an application for a credit card, you can save 20% on your purchase. Don't do it. It's opening up another credit card, and it's just gonna hurt you more than help you. I have this loan sheet here. If you're gonna start talking to different banks, different mortgage companies, you might want to make yourself a little spreadsheet because each one's a little bit different. For instance, I think we just went over it, or did we just have that slide? Yes, we did. The Florida Housing, they have several mortgages. They have several programs available. The interest rate's a little bit higher than you would get if you just walked in to a mortgage company. So you have to balance that out. Is it better to, if you have little money for a down payment, then getting down payment assistance and paying a little bit higher interest rate works for you. If you have money for the down payment, if you have money for the closing costs, then you want to try and get the best interest rate. But keep in mind, you can always come back and refinance that later once you get a little equity in the house and get a lower interest rate. So the idea is to get you in your first home. Now we're getting close to the end here of things that I wanted to go over tonight. I know I keep going over and over and over getting approved for a loan. And the reason I do that is because everything else is immaterial. I mean, you can get on realtor.com, you can get on Zillow, you can drive around, you can see houses, but none of that's going to do you any good if you can't get a loan. Now, oftentimes you'll go to a lender, mortgage company, bank, they'll give you your credit score. I mean, I've experienced this myself. And your credit score comes back, and let's say your credit score is 520. Well, you're going to need 620 for a bank. For a mortgage company, 580 is enough to get a loan, a credit score of 580. So you need to move up 50, 60 points on your credit report. Well, they're going to talk to you. They're going to counsel you. They're going to tell you things you can do to build your credit score up. They're going to say goodbye, and they're going to wait for you to call back because they're in the business of loaning money, and they're not going to follow up with you. That's what you need an agent for. That's why you need a realtor to work with you. Keep in mind, if you're out driving around and you see a sign on a house and you say, wow, I think that's a nice house. I think that's a house I could afford. And you call up the agent and you ask for information, well, bam, you've just committed yourself to that agent, because that agent is now your realtor. And that agent represents the seller. So they're not necessarily going to negotiate on your behalf to purchase the house. You need to have your own agent. You need to have your own agent. The best case scenario is you have an agent that has a relationship with the lender that you're working with, so they can work together. And the realtor, the real estate agent, is the one that will be following up with you to see if you've done the things on your credit score. But remember, going back to the first slide, the very first slide was, if you don't know where you're going, you're going to end up somewhere else. That's a Yogi Bear euphemism, but it's very true. If you don't make a plan, if you don't sit down with your bank statement and figure out how much money you can afford, because let's face it, owning a house is a little bit more expensive than renting, because the repairs fall on you, the insurance falls on you. However, your landlord has folded all that up into your monthly rent. So if you're paying $800 rent for a house, you're still also paying for the insurance. You're still also paying for any anticipated repairs, any normal repairs that'll have to be made. So maybe you could buy that same type of house you're living in for less than $800 a month. But you will still be responsible for the taxes, the repairs. Keep in mind that if you're financing a house, that's going to be included in your mortgage. Your property taxes will be included in your mortgage. So it's not like you have to keep that money aside to pay your property taxes. Repairs are not, but you do get a tax credit at the end of the year that should help you make some of those repairs. So let me just recap. We have a few minutes left here, have 5 minutes left, and I don't want to keep anybody over 30 minutes. I want to keep this short and sweet. So purchasing your home is a great investment. It's forced savings. You have to live somewhere. You might as well live in your own house, because rent is money that goes right in the garbage can. Done right, home ownership lays the foundation for a life of financial security and personal choice. You get to pick where you live. It's your house. There's pride of ownership. There's something about sitting in the driveway in a chair watching the sunset or watching the kids play, sitting in the backyard with friends, having a beverage, grilling out. That's a sense of community. Also, that's an asset that you're building. When it comes time, once you get 10, 15 years in on that mortgage, and if prices start going up, maybe 5 to 7 years, you have equity in that house. You can make repairs on the house. You can improve the house. You can gain equity that way. You can take that equity out when you need it. There are specific financial reasons to buy a home. Among these are equity buildup, value appreciation, and tax benefits. Those who have the most fulfilling lives base their decision on fact, not fears. The fact is, owning a house is financially better than being a renter. The following facts help dispel fears about purchasing your first home. Let me just go over these quickly. If you are paying rent, you very likely can afford to buy. There's never a wrong time to buy the right house. All you need to do in the short run is find a good buy and make sure you have the financial ability to hold it for the long run. The lack of a substantial down payment doesn't prevent you from making your first home purchase. Remember that. There are programs out there, but each one is different, and we have to do that on a personal one-to-one basis. The best way to get closer to buying your ultimate dream house is to buy your first home now, whether it be condos are a little bit more difficult to finance. They're getting easier, but a townhouse, it's almost like a house. You have a yard, a fenced-in yard usually. Buying a home doesn't have to be complicated. There are many professionals who will help you along the way. Listen, realtor doesn't get paid if you don't close on the house. The mortgage person doesn't get paid if you don't qualify for a mortgage. So those two working in tandem want you to be in a house, and they're going to do everything they can to get you in that house. Last item on this list. Here's the most important rule for keeping your stress to a minimum. You don't have to know everything. That's what the professionals are for. That's what I'm for. That's what a realtor is for. They know the process. We've done this hundreds of times. We know the pitfalls. We know what can happen, and usually we know workarounds around those. So we're almost out of time here. We are out of time. So let me just recap a couple things. Number one, do your financial sheet. Go through your bank statement. Even if you don't plan on buying a house, it's possible you could trim $50, $75, $100, $200 off your monthly expenses. You can take that money and you can shift it towards money for a down payment or closing costs. Find a realtor to work with, a realtor that you think can get you through the process, and start working with them in the beginning. Don't bring them in halfway through the process. Talk to a mortgage company. And I can give you recommendations. We don't have time to answer any questions tonight. It's 7:30. If you want to, on the website, under this chat, put your questions in. I'll get back to you. If you want a book, give me all your contact information, and we'll get a book to you. And we'll see you next Tuesday night on Tuesdays with Terry. Thank you.